Today on the show, I have the pleasure of chatting with Stefan von Imhof. Now, Stefan is the co-founder and CEO of Altsco, and he's a huge fan of alternative investing and has a strong background in alternative asset analysis and valuations. Now, prior to starting Altsco, Stefan was the head of product at Flippa, where he created Flippa's due diligence program. He's also spent time at Citrix.com and Linden.com, which was bought by LinkedIn, and he was the first product manager at HG Insights, a market intelligence company that sold to Riverwood Capital back in 2020. He's originally from Boston. He spent some time in Santa Barbara, California, and now he lives in my home country of Australia with his incredible wife. G'day, Stefan. Welcome to the show.
G'day. Great to be here, Reed. Thank you so much for having me.
Mate, my pleasure. Before we get into the background, but you live in Australia, you're coming to us from France, and you're originally from Boston. Global citizen.
That's it, all over the place. And yeah, it's been 15 years before Australia and Santa Barbara, California. So yeah, just all over the place, man.
And where do you live in Aussie right now?
We actually split our time between Melbourne and Adelaide, where my wife is from. So yeah, love both cities very much.
I've never been to Adelaide, and I've only spent like one day in Melbourne. So it's funny how even as an Aussie, I don't get up there. But I was
Adelaide's underrated, man. Adelaide's underrated. Everyone always looks past it. I'm telling you, it's a great city. Truly a great city.
They call it. I always used to call it Radelaide, and. Yes. The city of churches. But right. We're just talking offline. I just got back from 2 weeks in Australia for my sister's wedding. You're obviously in France and about to head back to Australia, but we haven't got you on here to talk about where you're from. We've got you on here to talk about your background and what you've developed. So with that being said, I like to ask and start the show with all my guests to rewind the clock and tell us how you made your first ever dollar as a kid.
I was a paper boy, man. That was it. That was the way. So, it's funny because like you talk to a lot of executives and CEOs and founders especially, and they all have one thing in common. Disproportionate of them were paper boys as a child. And I was no different. So being a paper boy in Boston where I grew up was especially difficult, right? Like, you got to wake up, well before the sun comes up. It is very cold for much of the year. But you learn, you get a great work ethic. You learn how to take care of customers. I mean, it's really your business in a way, right? So, I had that at a really young age. And I think that taught me a lot of lessons that I, carry through today.
That's awesome. And talk us about that growing up and the intrigue of, wanting to start your own business. Obviously, you're a very well-traveled guy, but were you always wanting to go into becoming your own entrepreneur and becoming your own, the founder of a company that you run today?
I think it's just natural. I mean, like either you have it or you don't. Some people don't. Some people do. I've gone back and forth between working for myself and working for, corporate culture. And I just keep coming back to entrepreneurship. It's just, for me, it's just, I'd rather just be in control. I just hate reporting to other people. I just like to work for myself. And, it's funny now because we're a venture-backed company. So it's like, I kind of have a whole new set of bosses, right, with our investors. So, you're always served someone, as Bob Dylan once said, but, still pros outweigh the cons. And I very much like doing what I do.
And walk us through your background. You went to university in Santa Barbara?
Actually, no. So I went to University of Massachusetts in Amherst and moved out to Santa Barbara after that. So my wife and I, who I'd met, we lived in Santa Barbara 15 years. At the time, Santa Barbara didn't really have a whole lot of a big tech scene. So we actually started a business. We started an e-commerce business. We were an online retailer of video games and hard to find accessories and repair parts. And really kind of like had some great years, rode the wave of like as Amazon was coming up and eBay was still strong, and had some great years. What happened to us was in that business was 2008. The crash hit us pretty hard, and we were pretty over leveraged too as well. So learned some lessons there. We were able to recover. And actually, I ended up selling that business on Flippa.com, right? And that was interesting because years later, I would actually become the head of product at Flippa. In fact, that's what I was doing before I started Altsco. So it's kind of interesting how, we've kind of come full circle.
And Flippa, for those people who don't know what that is, obviously as an Australian, I think I know what it stands for. It's a good bowling technique that Shane Warne used to use, but and that's an inside joke for anyone who doesn't know who Shane Warne is. Go Google it. But what is Flippa?
Flippa is a marketplace, actually the world's largest marketplace for buying and selling online businesses, selling e-commerce businesses, selling micro SaaS companies and products, and content websites. Flippa was actually started back in 2010, but it's way ahead of its time, and it's only like since COVID, it's really started to hit its stride. So I was there during COVID, and I was also there during Melbourne's big lockdown, and so I had nothing better to do on the weekends for 3 or 4 straight months. And that's when I started Alts.co. But Flippa was really, a big part of, kind of helping me think through Alts.co and kind of, help me actually get started with it as well.
So talk us about educate us on the landscape of online businesses and flipping them and buying them and selling them, and ultimately how you came to Alts.co as really an investment platform for alternative investments.
Yeah. So, Flippa is, like I said, it's a marketplace for buying and selling online businesses. But online businesses themselves are, e-commerce sites or micro SaaS companies or content websites, basically websites that make money from ads or affiliate marketing. That's actually it's a fantastic alternative investment. And that's actually how Alts.co got started is, on the weekends, like I mentioned, I was doing a lot of writing, and I started a newsletter called the Alternative Assets Newsletter. And it was primarily focused at the time on, cash flowing websites and flipping websites for profit. And I still to this day think that websites, are one of the best alternative investments you can have. But they're not a passive one, right? They're very active. It takes a lot of work and a lot of effort. And so what's interesting is I started talking about alternative investments through the lens of flipping websites and in that area. And there was another gentleman, a guy named Wyatt, who had his own alternative investing newsletter around the same time. Except he was coming at it from a different angle. He was coming at it from the world of collectibles and fractionalization and what was happening with a lot of cultural assets. And so we kind of had these similar newsletters that were talking about the growing world of alternatives, but we had, separate niches that we were focused on. And we were fans of each other's newsletters, and we kind of started talking on Twitter and stuff. And one day I just kind of called him up and I'm like, hey man, I don't really want to compete with you. Why don't we just join forces and build something together? And we never met in person. And in fact, we only met in person for the first time last month. And that was a year and a half ago. So it was early January 2021. We started working together. We started Alts.co officially. And we raised money together. And we started the Alts One Fund together. And up until last month, I couldn't tell you how tall he was. So it's a pretty crazy world we live in these days. But happy to say we finally met in person, and we get along great, and pretty cool.
How do you flip a website? We talk about flipping real estate on here. We talk, in big flips for my multifamily projects. I come in, I renovate, I put in better tenants, I increase the net operating income, increase the revenue, and I flip it to someone who wants to buy another asset, in 5 or 6 years. Yeah, okay.
That's it. It's the same idea. In fact, there's so much crossover between real estate. So I'm a big real estate guy as well. I love renovations, and that's part of the reason that why I was drawn to flipping websites. It's the same thing. You renovate a website, you take out what's not working, you put in new systems and monetization methods. What's the equivalent of redoing a bathroom or adding another bedroom? It's basically spinning up a new monetization scheme on the site, right? There's a lot of design work that can be done to make the site look better, function better, just like you can with a house. There's a ton of parallels. And in fact, there's a lot of people that come from real estate and get into website flipping and vice versa, I think too. The parallels it's basically a digital real estate is what we used to call it. Now that term's kind of taken on a new meaning with the metaverse now. So we've kind of backed away from that a little bit, but it's still, I like to think of website flipping as digital real estate flipping. Yeah.
And when you talk about other monetary or revenue generating ventures on a website, what do you mean by that to the layman? I obviously I know that when I buy a multifamily property, I can charge for parking, I can increase the rent of the actual units, I can charge for cable contracts, I can do all different things to increase revenue. What are you doing on a website?
It's a couple of different ways to make money from a website. The most easiest way that people often do is just they put ads on the website. That's kind of version 1 though, right? It's kind of having I don't know, maybe not the best tenant in or something. You get paid, but it's kind of a pain. It slows your site down, right? So there's better ways of monetizing. One of them is to spin up your affiliate program. So now you're basically putting affiliate links throughout your site and within your content, so that anytime someone clicks on that link and goes to, say, Amazon and buys something, you get a cut, right?
Yep.
And it's not just Amazon. There are hundreds of thousands of companies that have their own affiliate programs, and you can get a cut of, any one of those companies if they, if you get a sale from them. So that's a big way. But the biggest way, the thing that I love doing the most is what no one does. It's just add a newsletter to your site, right? So add a newsletter sign up form, right? So everyone who comes to your site, make sure that they sign up for your newsletter so you don't lose them forever. Now, once you have their email address, then you can email them. Then you can sell sponsorships in your email and newsletters, right? We still sell sponsorships today at Altsco. So, that's one of the biggest tricks you can do for sure. That's what I love doing the most. And it's so easy.
And when you're looking at, I always think about traffic, right, to a website, right? How do you increase that traffic? And are you looking for the website equivalent of this is a diamond in the rough and I can increase the traffic? Is that part of the metrics that you look at when you're assessing whether it's viable to flip the website or not?
Definitely. So traffic is everything to a website, really, truly everything. And there's basically 3 ways to get traffic. You can pay for it, which you don't really want to do unless you're an e-commerce site. And even then, it's very expensive. You can you improve your SEO, so you show up better in Google rankings, and that's all free. That's the best. That's what everyone wants to do, right? And that's a big part of this industry. A big part of website flipping is learning search engine optimization and learning SEO and learning how content works. And that's a huge part of it. The payoff is tremendous. You get thousands and thousands and thousands of free views each month. It takes a lot of work to get there. It takes a lot of work to maintain. And Google's always changing how the algorithm works. So, it gets tricky. And then the third way is, kind of like partnerships, basically referral inbound links. So, partnering with other companies to link to you, that actually helps SEO as well. But bottom line, if you have a great source of traffic, right, there's a high traffic site and that's just spitting traffic your way, that's obviously great free traffic as well. So those are the 3 main ways.
Right. And you're focused on trying to make sure that all 3 of them are maximizing to produce more revenue for the website, correct?
Yeah, it's an optimization game for sure. It's definitely optimization is a big part of it. Especially once you're every 5% or 10% increase in your numbers can mean 5%, 10% increase in revenue. That doesn't matter when you're starting out, but when you start to get big numbers, that can be it's a big lever to pull. So that's what makes it so much fun, and this is another reason not to work for someone else. It's how are you going to give yourself a 10% raise overnight working for someone else versus you can give yourself a 10%, raise in earnings by pulling the right levers. So, there it is.
So how are you valuing these companies, online, because it's not a physical asset. I own a physical piece of dirt, right? Or you might own a trucking company that owns, trucks. Or is it the IP that's the value here in the website?
Typically not. It can be for high-end sites. There can be some IP, especially for micro SaaS businesses. And this is what a lot of the sites you see on a company called microacquire.com, right? That they're making a lot of noise in the space. They focus more on companies and that have a SaaS component to them, recurring revenue, and some IP behind them. So it runs the gamut. Typically, the IP isn't a big part of it. It's basically just how much revenue you're pulling in. That's basically what it comes down to. But what's fascinating about that is you can buy cash flowing websites. People don't realize how cheap they are. You can buy cash flowing websites for 3 to 4x annual net profit. That's nothing. That's crazy low. That's, I've done some pretty good real estate deals in my life, and the best ones are have a 4-year payback period. But that's the best ones. The standard with website flipping is 3 to 4x. So, on average, you can buy, so if a site's making $25,000 a year net profit, you can buy that site for between $75,000 and $100,000 a year. Now you might think, okay, what's the catch, right? That's almost too good to be true. Well, the catch is it's not passive, right, at all. You've got to maintain. It takes work. It takes effort. And you've got to be careful also when you buy, because a good site will definitely, be priced well, and you'll make the money back in 3-4 years. Or sooner if you're really good at what you do. The problem is the due diligence. Like, you have got to do your due diligence and stuff. There's no regulation around this stuff. There's no lemon law. This isn't like buying a car, buying a house for that matter. There's no insurance. I mean, you got to just do your homework, do your due diligence. So actually at Flippa, I started the due diligence program to help buyers. We would basically, do that due diligence for them. Even then, it's not guaranteed, but it goes a long way because you know what to look for after years and years of doing it. But it takes some work. It takes some homework, but most sites are good. Most people are good. There's not that much fraud out there, but let's not kid ourselves. It does exist. So there is an inherent built-in risk to the whole game.
Flipping now to Alts.co, give us an idea of, you talk about alternative investing. So when I hear alternative investing, I think real estate, right? Because the traditional stocks and bonds and mutual funds is what all the financial advisors love to push. But you're even alternative of real estate. What are you selling on and what are you raising money for today for your investors?
Yeah, absolutely. So when we first started Alts.co, it was like, do we want to go tall or do we want to go wide, right? Meaning, like, do we want to focus on just like one or two like verticals or niches, or do we want to be broad? And right away, like, Wyatt and I were like, no, there is so much happening out there, so many new investable asset classes. Let's go as broad as possible. And so what's happened is fascinating right now because, like, there's, confluence of trends happening, right? So there's new technology coming online. There's new regulation, right? Especially what's known as Reg A in the US, which basically makes it extremely much easier for companies to securitize assets. This is a brand new legislation. It's less than a decade old now, right? So that's kind of given to the rise of a lot of new alternatives. That's what gave to the rise of a lot of fractional real estate, for example. But then now that's been expanded to fractional collectibles and all sorts of stuff. I mean, all sorts of new asset classes. I think the third big trend is like just the rise of the retail investor, right? Like, people taking, they're investing into their own hands as opposed to trusting a financial advisor with their money. They're like, no, I can do this. I can do my own research online and what have you. And so all of these three trends have kind of combined into one. And so to answer your question, I mean, we cover everything from books to comics to video games, vinyl. That is one of our favorite alternative asset classes right now. We do music rights is a fantastic one. Litigation finance. We cover peer-to-peer lending. We cover, if it's not a stock or a bond, we cover it. Art, wine are huge. Real estate's interesting because, to your point, real estate's like the original kind of like OG, like alternative investment. But there's so much happening even within real estate that we consider alternative. And so that's what we try to focus on. So we love like vacation rentals. I manage 2 vacation rentals. I love ADUs, accessory dwelling units. Like, I've built an ADU in our place in Santa Barbara. I love retirement communities. I love storage is great. Especially like cold storage is really interesting. Data centers are really interesting. So like, even within real estate, there's all these alternative real estate that's really interesting to us. That's kind of what we try to focus on most, as opposed to just, residential. So yeah, it just runs the gamut. I mean, we're really all over the place. If you have a look at the site, you'll see what I mean. We cover everything.
How do you mentioned comic books and vinyls? How do you value that? And is it very similar to like wine and art? Is all in the eye of the beholder?
So okay, so each market is very different. This is what I love about what we do, is like, you get to learn the intricacies of each market. So art is valued less on the eye of the beholder than you think. Fine art's mostly valued on provenance, right? So who owned it before,
right?
And of course, like, who the artist is and all that. But wine is interesting. Wine is just a nice steady up and to the right, like, consistently over the years. It's like just completely not correlated to anything else. It has its moments where it goes down for sure, but the wine market's fascinating because, like, the Chinese are starting to develop a big taste for wine. A lot of, like, Australia, for example, they're exporting a lot of wine to Asia now. Here in France, we certainly hasn't slowed down at all. I think France is the second biggest producer in the world behind Italy. Wine is just its own beast. To answer your question, like, vinyl, for example, and like comic books and stuff. Okay, so it all comes down to like grading. So like, comic books, video games, action figures, everything has to be graded, right? So there's a couple of different authorities, well-known authorities that are grading these assets now. And so they grade them on a scale. Like you've probably heard of some of these companies like CGC and like, so they basically like they grade like sports cards, memorabilia. There's all sorts of like intricacies I don't want to waste too much time getting into when it comes to memorabilia and stuff like that. But this basically, it has to be authenticated. It has to be graded. Once it's graded, then it just becomes a mathematical equation as far as what it's worth. Because like, let's say you have like a LeBron James rookie card and, it's like graded, it's like a 9.8, right? Okay. So you look at the grade and you look at the population, like how many other cards are out there that we know with that same grade, right? And so, the more information you have, the better. So you can basically look at like, okay, what do other LeBron James 9.8 rookie cards sell at? What have they sold at? How is that increasing? What about all LeBron James cards, period? What about all NBA cards, period? What about, and on you go. And you basically just put that all into a giant database and you're able to see what the market looks like, what the player looks like, what the population looks like, and what the value should be. And that's how you know if you're getting a good deal or not. Now, all of that is to say is that these markets are changing rapidly because more and more people are getting into the hobby, so it's driving up a lot of the price. So it's tricky. It's constantly like, you got to be careful of overpaying. The sports cards market is actually down right now. So, you got to be, on one hand, it's bad. On the other hand, it presents some good buying opportunities. All of these markets are very different, to answer your question. I mean, but it all comes down to what is the grade? What is the condition? That basically is everything, at least with physical collectibles.
And are you the storage or the housing facility of that data to present to investors, or are you going out to other industry standard, like some of these grading assets or grading companies to get that data on a specific niche within a specific alternative asset?
It's funny because like the data is thick in some markets and it's thin in others. So we like in some areas there's a lot of data, right? So like the sports cards, there's quite a lot of data out there, for example. But with like vinyl, for example, like that data did not exist. So we actually created the world's first vinyl index. So now we understand what makes a good buy when it comes to vinyl, and we understand comps, right? That's the other thing I didn't mention before is everything comes down to comps. It's actually similar to real estate, right? So when you're selling a house, like, okay, what are the similar square footage in this area, in this neighborhood? What did that sell for? And then you put it into a machine and you come out with a number. It's very similar in collectibles, right? So, I mean, yeah, comps is a huge part of it. A lot of the data is out there. Like with real estate, for example, it's already out there. But again, with vinyl and some of these other markets, we're actually the ones creating it. So with wine, we just borrow the data. We just buy the data basically. LiveX is the biggest wine tracker in the world, wine price tracker in the world. liv-ex.com. There's no sense in recreating the wheel. What's interesting about LiveX though is they don't cover tequila, and so we're creating the world's first tequila index, right? So when I say like we're alternative, like we like to think of ourselves as like alt, right? Like we take alternative to like a whole nother level. And those are the realms we like playing in.
And so with all the valuations going on, you're really just looking for the asset to appreciate in value over time, right? You obviously can't enjoy the wine, you can't enjoy the tequila. Yeah. And so what does a typical investment look like when you're raising your fund? Is it a 3 to 5 year hold? Is it a 10-year hold? Like what's the sort of time horizon there?
So so the Alts One fund that we've raised, that's a 10-year fund. And that's what it has to be because, I mean, there are other alternative investment funds out there. Some of them are 3-year funds. Yeah, fine. If you want to try, go for that. Like, go for it. I mean, we're buying for the long haul, right? Like we're saying that the Beatles record that we just bought, by the way, we just picked up a copy of the White Album, second pressing, number 2 ever pressed in the world. We think it was owned by John Lennon. We're saying that I don't know what it's going to do in 1 year or 2 years. I'm saying in 10 years, that's going to be a lot more than we paid for it, right? So we're buying for the long haul. Absolutely. Yeah.
And are you where's all this memorabilia being stored and all that sort of stuff? So obviously you have to take a lot of good care of these pieces of artifacts, nearly like to make sure that they hold their value over a period of time.
Luckily, there's a whole sub-economy that's sprouted up around what we call vaulting. That handles the storage, the logistics, the shipping, and the insurance on these assets. So as sad as it is, I've actually we just won this Beatles vinyl album at auction. I haven't seen it yet. I'm probably not going to see it for a good year. It's being shipped to a secure facility. So there's all sorts of, there's a whole sub economy that takes care of that now. Yeah.
Got it. And how much of, and I don't want to get into a taboo subject here, but is it all around tax benefits of investing in these assets because they're in travel, they're in transit, or is it actually for the appreciation over the long term, or do you get both because you get the depreciation?
Definitely don't do this for any tax purposes, and I'd be the last person to advise on tax stuff. I mean, that changes per every jurisdiction is different. Right. I don't even go there. It's all about the appreciation. For now, those are some of the assets that we buy. So. Some of them have nothing to do with appreciation at all, right? So music rights, for example, is one that we're really excited about, right? Music rights are fascinating. So there's nothing physical there. I mean, it's all digital, but it's not about appreciation. It's about cash flow. What's interesting about music rights is that it's similar to websites, in real estate for that matter, in that it provides cash flow, right? So it spits out cash. Completely different value proposition than something like, comic books or video games, right? So we haven't purchased any music rights for our fund yet. That is the one I'm most excited about, actually, frankly. That is, of all the alternative asset classes, I think that is the most underrated, and nothing comes close.
No, I know a couple of investors here in Los Angeles who are real estate investors, but they also are music right investors as well. And then obviously LA being, the city of Hollywood, it is obviously full of those types of people. And you can make some big money, right? Who sold their rights recently? Was it someone notable?
So Dylan was the big one.
Yes.
Yeah. I mean, so this is fascinating because there is a lot of music rights sales activity, but it's all happening on the high end, right? So it's hundreds of millions of dollars. Bruce Springsteen sold his catalog.
Yes, that's right.
I forget 300 million. I can't even remember. I mean, it's just bonkers, but it's a great deal. I mean, it's a terrific deal. It's basically Bruce fast forwarding 30. I mean, I think he got 30x for it, right? Or maybe 35, 40x, right? So is he even going to be around in 30 years?
Right.
Who knows? So it's a no-brainer for him, but for a fund, they're making a bet on, that this will be valuable 30 years from now, right? And the answer is, I think personally, yes, for someone like Dylan and Springsteen. But that's all happening at the high end, right? So on the low end, no one's touching the low end. I mean, there's just very few sales under $1 million. But it's, to me, that's such an opportunity because it's think about if you're an artist and you're making, I don't know, $50,000 a year, let's say, right? So pretty good money, but also not great, not enough to really, build the life you want to live or buy a house for your family or, so if someone comes along and says look, I'll pay you $250,000 right now for everything that you've already written. Everything from here on out is yours. Everything from this day past is ours, right? Who wouldn't that would be so compelling to so many artists. They get to fast forward 5-6 years of their life. They're able to reinvest that in whatever they want to invest in. They're able to, start a family or do whatever they want to do. And this stuff is just not happening. I mean, I'd love to talk to your friends, by the way. Please introduce me if you can after the call.
Yeah.
I mean, I'm not kidding around. I want to talk to anyone who's making moves in this field. But my guess is they would be doing it at above the $1 million range. And, there's really nothing stopping anyone from doing it at any level, So it's a great market, really fascinating market.
Where's Alts.co going? What's the big picture for this in the next 5 to 10 years?
So what we're going to be doing is we're going to be building an alternative investment platform, right? So you kind of think about our evolution is we started as a newsletter and then moved that to investing community. And that's where we're at today. We're an investing community with a fund, right? The Alts One fund. The next logical progression, and frankly, the last stop, I think, for us is to build a platform, right? So we would become a broker-dealer and we would be able to transact alternative assets on the platform through us, right? There's a lot that goes into that. And we're actually right smack in the middle of raising money for us, for the business right now. That just kicked off 2 weeks ago. So we're right smack in the middle right now. But that's what we're planning on doing.
That's awesome. That's awesome, mate. Well, look, at the end of every show, we like to dive into the top 5 investing tips. You ready to get into it?
Let's do it. I got my final sip of wine here. Let's do it.
That's awesome, mate. Look, what is the daily habit that you practice to keep on track towards your goals?
That's an easy one. I mean, so my partner and I, we have a daily stand-up. And I mean, it's a must because like we work remotely, right? So he lives in Spain. I usually live in Australia. And so, we basically like communication is everything for us. Mm-hmm. So it's an easy one. Just first thing in the morning for him. For me, it's the end of the day. But we, just make sure we all us being equal, we try to talk every single day. So that's an easy one.
Yep. Question number 2 is, who's been the most influential person in your career to date?
Most influential person? Oh, man. God, who do I look up to the most? I mean, what's interesting is for a long time, I would have said Steve Jobs. The interesting thing is about Steve Jobs, though, is that, well, let me take a step back. The reason I love Steve Jobs so much is because he was like, he had both the left brain and the right brain just firing, right? Like he was creative as hell, but he was also analytical and cutthroat and, a little bit on the spectrum. Mm-hmm. That's a rare combination, right? I try to be balanced in everything I do. And I felt that Steve Jobs had fantastic balance. However, Steve Jobs had a very different approach to management than I do. And I'm trying to grasp and wrestle with that fact. So Steve was like notorious asshole to work for. Right. I try to win people over with kindness. And so, we're very different on that and that level. And so, I think I still think he's just the one I admire the most, just in terms of what he's done, how he's done it. As different as we are, I think he's who I'd have to go with.
Awesome. I love it. Question number 3 is, what's the most influential tool in your business? Now, when I say tool, it could be a physical tool like a journal or your phone, or it could be a piece of software that you just can't run the business without. What is it?
What's funny is like we're getting so far away from just phone calls, and I don't know why. And like, I'll be on Slack sometimes and I'll be like chatting with one of my, teammates about something. And I'm like, what am I doing? Like, why does no one just pick up the phone anymore and like call, like it's just, right. I don't understand. Like it's such an easier way to just deal with things and like get things done. I happen to love phone calls. I mean, I know like you talk to like Gen Z and they have like an aversion to the phone. They won't, I mean,
why are you calling me?
Yeah, that's fine. I guess it's a generational thing. To me, it's just, I don't know. I mean, even the thought of like doing a phone call over a Zoom meeting is like, please, like, it's just so much easier sometimes. I hate having to turn on my camera half the time for Zoom meetings. I just like calling people, So yeah, I mean, for me, it's like the phone, the old school phone.
Yeah, love it. Love it. Question number 4 is, in one sentence, what has been the most, or the biggest failure that you've faced in your career, and what did you learn from that failure?
Oh, over leverage in 2008. I mean, so like I alluded to before, I mean, we were, my business, like we were super over leveraged. The other thing, we were dealing in video games, which like aside from cars, nothing depreciates faster than video games in the world. I mean, within 6 months of a video game's release, that they've lost 30-40% of their value, and it just goes down from there. So yeah, we were leveraged to the T with video games and accessories, and then 2008 hit and we took a huge loss. And the thing is, I was young and like I was able to recover from it, and we recovered really, really well, actually. Like I said, we didn't actually go out of business. And we could have, we picked up the pieces and put them back together, which is really a great lesson as well. But, it taught me a lot about leverage and just, how to manage leverage. It's interesting because leverage, I think, is fundamentally a very good thing. But I think understanding the power of its bidirectionality is very important. Yeah. And, 2008 definitely taught me that. So I'll never forget that lesson. That's for sure.
Awesome. Well, mate, last question is, where can people reach you to continue the conversation? They want to be in your sphere. Where do they go?
It's easy, man. Just go to Alts.co and, check us out. See if you like what we're getting into and like the stuff we're talking about and writing about. And, just sign up for our newsletter. Our newsletter is kind of where everything starts. So just, go to the site, sign up for the newsletter, and reach out anytime. I'd love to hear from you. It's Stefan at Alts.co. Awesome,
man. Well, look, Stefan, I love talking to you today. It's probably the first episode I've ever spoken to, someone who's selling and buying, playing cards or bottles of wine, or, in that sort of different world that, we all hear about. But I do love the vision of where you're going, because like the music rights, it's so niche. You really have to understand it. But when there's not a lot of competition in there, you can definitely pick up some really good buys. So creating a platform like what you're doing is freaking awesome. And I think it's got a big growth potential into the future as you keep to be, providing that smorgasbord for your investors to come and transact on the alternative investing platform. So I wish you all the best. Man, thanks again for coming on this show, and enjoy the rest of your week.
Thanks, Reed. Thank you very much.
Well, there you have it, another cracking episode jam-packed with some incredible advice from Stefan. And if you want to go and check him out, it's alts.co, so alts.co. Definitely go check it out. It's going to be, I think, a really big success in terms of just cultivating all the different alternative investment opportunities that are out there that I didn't even know existed, right? And you can really invest in anything you want these days, and this is a platform that helps you go and do that. Now, if you do like this show, the easiest way to give back is to give it a 5-star review on iTunes. All the notes from today's show will be up on my website at reedgoosens.com. And I want to thank you all again for taking some time out of your day to tune in to continue to grow your financial IQ. And we're going to do this all again next week. So remember, be bold, be brave, and go give life a crack.